Welcome to the channel, guys. My name is Jess. So for the last 3 weeks, Bitcoin has been pretty much doing nothing but just going down. And with Bitcoin dominance rising alongside it, it really feels like the whole cryptocurrency market has almost topped out early. But in today's video, we're going to dive into the charts to talk about what would really validate that macro bearish scenario. There's a weekly candle close that's coming up that has a lot of significance for a number of reasons. And we'll dive into the short time frame charts as well to talk about the analysis there that would validate a bullish reversal and the probability of that based on the current price action. Finally, we'll take a look at the entire cryptocurrency market as a whole by taking a look at Bitcoin dominance and total 3. Before we do though, make sure you guys like and subscribe to the channel down below for regular Bitcoin analysis every Monday, Wednesday, and Saturday, and ring that notification button so you never miss an episode. If you're after even more content, be sure to check out the free Telegram channel over here for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. Alrighty guys, so diving right into the charts here on the weekly time frame, we can see the absolute brutality that has been the last 3 weeks of price action. Bitcoin has dropped, I think, 13% from the top this week here to where we are currently, and the price is now back at $60,000. So we're retesting this really key level of support over here on the weekly time frame. The Fear and Greed Index has been reflecting the terrible price action. It's now back down at 44, which is the lowest it has been since around this October period, right? And on 10th of October, we were sitting at just at 43, I think, just below where we currently are. And if you guys remember the 10th of October, that is when we started to form our bull market uptrend. So during that mid to early October period is really when we were just starting to exit the accumulation / bear market phase of Bitcoin's cycle. So the fact that Fear and Greed Index, or the sentiment, market sentiment, is back down to where it was over here when we were just exiting the bear market is very, very concerning. We can see that people are clearly worried, and there are some real concerns out there about whether or not Bitcoin has actually topped out over here. So let's go ahead and dive into our macro analysis, specifically on the weekly time frame, to talk about what would actually validate the scenario that we have topped out and we're entering a macro bear market. Before we do though, let's hear a quick word from our sponsor, BTC.D. BTC.D is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. Alrighty guys, so jumping right into the weekly chart here, we have a weekly candle close coming up this Monday at 10 a.m. That's for me in Australia. Wherever you are in the world, that might be a little bit different for you. But this coming weekly candle close is very, very significant for two main reasons. There are two main levels that we're really looking to clear here in this weekly candle close. And that very first one is 61,500, or if you guys want to be really specific, it's 61,473, this red line over here. And the reason why that level is important is because it is the lowest level that Bitcoin has had a weekly candle close within this channel of consolidation. And if we have a candle close below that level, below 61,500, it tells us that we are printing a lower low on the macro charts, as well as the lower highs that we've gotten here, right? Which is suggestive of a macro downtrend, okay? Even if we haven't entered into that full-on bear market yet, this is that very first warning sign that this channel of consolidation that we've entered into over the last 3-4 months is less likely to have the positive breakout that we're looking for, that would otherwise be suggested by, this pattern formation, than a potential breakdown, which is again suggestive that we're going to enter that macro bearish downtrend. Now, obviously, a trend line is one thing. It doesn't suggest any validation yet. There is a potential that we form that lower low, and don't lose $60,000, bounce, breakout anyway, right? So that is still a potential. So after looking for trend formation, we need validation. And the validation for that bearish move is going to be the loss of $60,000 for the weekly candle close. So if we have a look at the prior candle closes that we've ever gotten within this channel or above that 60K support, we can see we've actually tested levels at 60K or just below 60K at least 7 times within the channel, but we have never actually gotten a weekly candle close below that level. So if we lose 61.5 and we also close below 60K over here, that suggests that we have exhausted this level of support and are very likely to then enter a macro downtrend. So clearly this candle close coming up on Monday is really important, and we really do need to look for a nice strong bounce here before the end of the week, and at the very least clear this 61.5K level. So let's go over to the short time frame charts and take a look at what's happening there and the likelihood of us getting that candle close by the end of the week. So moving over to the 4-hour time frame, guys, we can see the relevant downtrend here that's taken us through this last 3 weeks of downtrending price action, and that is this trend line over here. We have 2 points of validation for the RSI, on the RSI for that trend line. 1, 2, we've had a little bit of a fake out here. I'll talk about that in just a moment. But as of right now, within the trend line, naturally the assumption is that, the trend is your friend until it ends. So when we're in a downtrend, the natural assumption is that we are going downwards. But all trend lines do break at some point, otherwise we would just be in a continuous state of one direction. And so what we're really looking for right now is the signal that the bearish move is over. So right now, Bitcoin is actually forming for the first time within this downtrend a higher low. Right, we can see this one over here. After the range low test of 58,300, we have managed to get another range low over here at 60,000. So we closed above that level of support at 60,000 and also formed a higher low. So it looks like we are starting to see potentially the very first signs that we are getting some bearish exhaustion over here on the trend line. And I'll go over the bullish case scenario in just a moment. We'll zoom in on the smaller time frame, but let's quickly talk about the bearish case scenario, because while we're in the downtrend, it's natural to assume that we're going to go downwards. So that first trigger that we have for that next bearish continuation on the short time frame is going to be the loss of our higher low, right? And a loss of that $60,000 level. So if we close below that level, we know, okay, the next move that we're going to make is going to be a retest of that sell side liquidity zone over here within this little range of price action at $58,300, and that's going to be the short time frame bearish trigger there is 60K. Now, if we move to 58,320 over the weekend, the likelihood of us recovering to 61,500 and getting that candle close above that key level on the weekly chart is highly unlikely, right? It's the weekend, there's low volatility, low volume, low everything, low trading volume, nothing really moves all that much over the weekend. So if we do manage to get that move all the way down to 58,300, I really don't see the price recovering quickly enough for the weekly candle close. So that is probably the short time frame confirmation that you need right there, that there is something to be worried about. And below that trigger point here at 58,300 is the range low for the massive channel of consolidation that we have here, and that is at 56,500. I've drawn in that red line there so you guys can see it easily on the charts. And this level here, getting a candle close here on the 4-hour time frame, right, let's say we get a candle close below 60 or below $60,000 or just at $60,000, regardless. If we get a 4-hour time frame close below this liquidity level over here, that is a surefire warning sign that the macro bearish trajectory has begun, right? Because we've lost the range low for this massive channel of consolidation over here alongside those weekly candle closes that I told you would be bearish. So even if we get that candle close on the short time frame, that is that trigger point to be looking out for. But as of right now, the chart is looking okay. So let's go ahead and talk about the potential for, first of all, a retest of the trend line and a breakout from that trend line. So to do that, we're going to zoom into a 30-minute chart. So the 30-minute chart is actually looking really, really bullish. Now, the main reason is because of the structural pattern, but also because of the recent dip low over here to $60,000. So on that 30-minute chart, we can see that for the last couple of days, maybe 3-4 days, we have been in a sideways channel of consolidation over here, right? This horizontal, parallel channel, whatever you want to call it. And we've entered into it from the bottom side up, from that test of 58,300, moved up to enter into this channel, with very clear tests of support over here. We have one test of support over here at 60,500, another one over here, another one over here, and we've had 4 tests of the range high resistance. So again, very clear level of short time frame resistance that we have over here. And most recently, we've had a dip to the range low. And in that range low, we have very quickly, cleared back above 60,500, that base of support, right? Re-entered back into the channel, and we have also broken out of the short time frame downtrend in momentum over here. So what this is basically telling us on the short time frame charts is that we're in a bullish channel of consolidation. We've had a dip to range low to grab sell-side liquidity, and upon clearing back within that channel and shifting momentum back to being very bullish, we now have a very, very high likelihood of seeing a test to the range high over here. So what this chart is telling us over here is that we should be seeing over the next couple of days, maybe not a couple of days, but a couple of hours. This is a very small time frame, so maybe like the next day. We should be seeing a test of this range high over here at $62,000, right? That's best case scenario. Okay, maybe we don't go as high. Maybe we just go to the midline of the channel over here where that next little range of resistance is. But that would still be very good. That is $61,300. So it tells us at the very least that as of right now, it doesn't look like we should be moving below $60,000. It does not look like we should be moving down to this level over here at $58,300 and, you know, starting to really validate that bearish case scenario over here. What we can also see is that upon breaking this channel of consolidation here, we have our key bullish trigger point over here, and that is 62,447. And you guys can see that from this little wick over here. That's the range high wick, and you can also pull up the liquidity swings indicator over here, and that will draw that line for you as well. So either way, that's how you can see it, and it's basically telling us that upon moving to the range high, if we manage to get a candle close above this level over here, not only have we broken out of the downtrend, but we have also closed above the key short time frame bullish trigger over here that's going to take us to the range high here, or sorry, not the range high, the range resistance at $64,000, that next resistance within that massive channel of consolidation that we have on the 12-hour or weekly time frame. Right, and that's why on the 4-hour chart that I showed you guys before, do you guys remember this RSI downtrend, that little fake out that we had? We tested the range high resistance. We were unable to clear above that liquidity zone, and hence we broke back below the trend line and broke back into that, you know, channel of consolidation. So if we're looking for a bullish breakout of the channel over here, that is the key level that we're looking to clear, is 62,447. Breaking above that, that is our bullish validation that this 3-week-long downtrend should be over. We should be moving to that next range of resistance over here at $64,500. So while the macro charts are looking a little concerning, we are really on the edge of a cliff in terms of that weekly candle close. The short time frame charts look like they might just be recovering just in time to kind of save Bitcoin as for right now. So Bitcoin isn't the only one that is recovering a little bit. Total 3 and Bitcoin dominance is also starting to drop. So let's go ahead and talk about the total cryptocurrency market and how that is actually looking like we are due for a bullish reversal. If we take a look at Bitcoin dominance over here, we can see that over the last week, it's actually dropped a fair bit. It's looking quite good, or, you know, it's looking better than it was. It's back down at 64.35% in comparison to the range high for the month, which was around 56%, which is a lot better. And considering the fact that Bitcoin has been doing nothing but dropping for the last 3 weeks, seeing Bitcoin dominance drop after all the really aggressive altcoin behavior that we've had over the last 2 weeks, look at that. Like, you know, oh, what was this? 15% drop for altcoin market cap, massive in comparison to Bitcoin, right? The fact that we're seeing that recovery is actually a really, really good sign, because even though Bitcoin's going down and Bitcoin dominance is going down, it doesn't mean that altcoins are necessarily going back up or, you know, really aggressively recovering, but it tells us that the bearish movement that we're seeing from altcoins is really slowing down in comparison to Bitcoin's aggressive bearish movement. And some of them are even going sideways and maybe even a tiny bit up, right? We saw total 3 is actually bouncing on that key level over here. So what this is telling us is that we are actually starting to see the early signs of the bearish exhaustion for altcoins and potentially early signs for a bullish reversal over here. We're not seeing bullish reversal just yet, and we need Bitcoin to really confirm that macro bullish reversal over there on that weekly chart. But as for altcoins, it does look like their really aggressive bearish price action might actually be over here, and they are starting to really recover. Again, taking a look at total 3, after that huge flush to this critical bear market bull market trigger level at 565 billion, we have recovered. The weekly candle close looks very likely to close above this key level of support over here, which is a really, really good sign. Does look like we're bouncing from that prior week. And it tells us that altcoins in general are starting to recover a fair bit. So if Bitcoin continues to go up and we do actually manage to get the recovery from $60,000, like, I spoke about on the 30-minute chart, if we manage to close above 61.5 on the weekly, we manage to, on the short time frame, close above 62.4k, get the bullish continuation, yada yada. If we manage to do that and Bitcoin dominance continues dropping, it is very likely that we are seeing the end of the bearish trajectory for altcoins, and they should continue to more aggressively recover upwards. So overall, guys, just as market sentiment is really starting to flip bearish on us, and Food Ingredient Index is at 44, which is crazy, I think we are starting to see some very good signs. Alrighty guys, that is it for the analysis that I have for you today. So hopefully after watching the video, you know what is really going to validate that bearish macro bearish trajectory, and what on the short time frame is going to tell us that we are due for a bullish reversal. We're going to get that bullish continuation that we need. And if you're seeing other analysis, specifically the 5.3 rule and the 2-month doji candle that's telling you that the top is in, there is another YouTuber called Wolves of Crypto. He's a friend of mine and a friend of Mega Whales. I know a lot of you guys are from his channel as well, who made a video about it, and it's very informative. He's a little bit passionate, but he gets the point across. And if you are concerned about those two particular pieces of analysis telling you that the top is in, you should definitely go watch that video. He doesn't know that I'm saying this, by the way. So it's not sponsored. There's no reason for me to give him a shout. He's a much bigger channel than me. But anyways, if you enjoyed the video or you learned something, don't forget to like and subscribe to the channel down below. And if you're after even more of my content, be sure to check out the free Telegram channel for daily Bitcoin updates, as well as crypto and economic news. If you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to sign up down below to BitUnex for 15% off all of your trading fees and $5,500 in sign-up rewards. Hope you guys have a really great week, and I'll see you next time. Bye.